Ladies and gentlemen, good day and welcome to Q3 and 9 months FY23 earnings conference call of PSP Projects Limited, hosted by Ambit Capital. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amar Kedia from Ambit Capital. Thank you, and over to you.
Thank you, Shashi. Good afternoon, everyone, and a warm welcome to the Q3 FY23 earnings Concall of PSP Projects. We have the management today being represented by Mr. P.S. Patel, Chairman, MD and CEO, and Mrs. Hital Patel, CFO of the company. I will now hand over the call to the management for their opening remarks, post which we will open up the floor to Q&A. Over to you, ma'am.
Actually, the call is not very clear. Can we reconnect it or should we connect from here? Because your voice is breaking too much.
Sir, when I am speaking, are you able to hear this clearly?
No, sometimes it is clear, sometimes it is breaking. Yeah, no, your voice is breaking. Maybe because of the net issue.
You can disconnect, sir. I'll call you back.
Okay.
Thank you. Ladies and gentlemen, please stay connected. We are reconnecting the management team. Ladies and gentlemen, we have the management team, so please go ahead.
Yeah, thank you. Good evening, everyone. Thank you for joining our earnings call. Please note that a copy of our disclosures is available on the investor section of our website as well as the stock exchanges. Please do note that anything said on this call which reflects our outlook towards future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks and that the company faces. With that, I would like to hand over the floor to our MD, Mr. Prahlad Patel, for his opening remarks.
Thank you, ma'am. Good evening, everyone. A warm welcome to each one of you, and thank you for joining us on quarter 3, 9 months financial year 23 earnings conference call. I trust everyone is doing well. I believe you have got a chance to go through the financial results and investors presentation uploaded on the stock exchange and website. The quarter has been decent in terms of execution and revenue after 2 succeeded quarters. During quarter 3 FY23, revenue recorded from all 7 EP projects is to the tune of rupees 165 crore and rupees 268 crore as on 9 months 23. The execution is being streamlined and you will see a better execution going forward from here. During Q3 FY23, revenue growth recorded was 2% year-on, largely because of higher proportion of near completion projects during Q3 FY22. The revenue during the quarter grew by 39% quarter-on-quarter, largely aided by higher execution in 7 UP projects together. EBITDA margins have been in line with our guidance. On the order book front, PSP project has outstanding order book till date of rupees 5075 crore. During 9 months FY23, the company has received the highest ever order inflow of rupees 1950 crore, excluding GST, as compared to 978 crores during last 9 months FY22, a 100% growth year-on-year basis. During the current financial year of FY23, majority of the projects awarded are from the state of Gujarat. One major development that took place in the company was awarded a project of Surat Municipal Corporation worth of rupees 1344.01 crore in January 2023, thereby taking our outstanding order book to rupees 6418 crore and order inflow as on FY23 to rupees 3294 crore, surprising our order inflow guidance of rupees 2500 crore this year. The SNC project awarded is for construction of 227-story state-of-the-art high-rise office building with a built-up area of 2.20 lakh square meter. It is a turnkey project with 36 months completion. These company buildings will be one of the tallest administrative buildings in India and tallest in India. We are happy to announce that the company has completed 200 projects so far since its inception in 2008, with 85% private projects consisting of institutional, industrial and residential projects and balance 15% were government projects. As on 9 months FY23, we have 46 ongoing projects. In many of our existing projects, the company has started supplying certain materials through our precast facility, which shall help the achieve faster execution and aid us in maintaining the quality and speed. I shall now inform certain key highlights that took place during the quarter and 9 months. Total 2 projects were completed during this quarter. They are the tallest residential project of Gujarat awarded by Nila Infra and our 7th project in GIFT City of rupees 122 crore. Industrial project by leading chemical company based out of Baroda. Further, we received a repeat industrial order to construct a chocolate factory and an additional order received from Adani Airport. This year, the order inflow has been the highest as compared to the past 5 years. During the quarter, we completed 4 projects. All the projects were completed in time. Few of prominent projects completed are Downstream project of Torrent, Reliance Jamnagar project for animal rehab and rescue, Industrial project for Ragbakri Group near Ahmedabad. As on 9 months FY23, out of outstanding order book, the government projects completed 52%, institutional project comprises 26%, 52% institutional projects compared to 26%, comprised of 26%, industrial and residential project comprised of 11%. As on date, we have 46 ongoing projects, of which 53% are based in Gujarat, 32% in UP, 14% in Maharashtra. EPC and turnkey projects constitute 69% and civil projects constitute 31%. EPC projects include planning, designing, construction and post-construction activities that has opened the horizons of growth for our company since last few years. Big pipeline, going forward, we have a big pipeline approximately 4,500 crore, of which 60% is from private projects and around 25% from state of Gujarat. Few of the major projects in our big pipeline are Gems and Jewellery Park in Mumbai, 1,200 crore, Central Vista MP Chambers at Delhi NCR, 1,210 crore, private residential township in Delhi NCR, 500 crore, IT Park in Chennai, 370 crore, development of Baroi Dam, 334 crore, industrial project in Hazira, 300 crore, Delhi Metro MEP package, 200 crore, one of the tallest residential in Ahmedabad, about 120 crore. To summarize, this financial year by far has been the best year in terms of order wins, which will very well be reflected in our growth going forward. A pickup in private CapEx is adding to India's growth story. We are confident and positive for the growth in our business segment too. With this, I conclude my remarks, and now I would like to hand over the call to Ms. Shetal Patel to take us through the financials.
Thank you, sir. The financial performance during the quarter ended December 2022 is as below.
Sorry, ma'am. Can you repeat, please? Audio was not clear right now. Kindly repeat.
Yes. Thank you, sir. The financial performance during the quarter ended December 31st, 2022 is as below. Quarter 3 FY23 versus Quarter 3 FY22. The revenue from operations for the quarter is at rupees 497 crores versus rupees 486 crores, which is increased by 2% on YOY basis. EBITDA for quarter is at rupees 62 crores versus 74 crores, which is lower by 17% on YOY basis. EBITDA margin is at 12.39% versus 15.25% of quarter 3 FY22. Net profit for the quarter is at rupees 35.32 crores versus 46.94 crores, lower by 25% on YOY basis. PAT margin is at 7% versus 9.5%. During the quarter, the revenue generated from 7 UP projects put together was 165 crores, and cumulative revenue till 31st December 22 is 417 crores. Decrease in other income is mainly attributable to reversal of impairment of loan of 2 crores to subsidiary company PSP Projects and Proactive Construction Private Limited in quarter 2, which was not there in quarter 3, FY23. Increase in employee expenses mainly due to increase in employee strength, annual appraisals and increments, and increase in managerial remuneration during 9 months of FY22-23. Increase in finance cost is can be attributable to increase in utilization of fund-based limits, increase in interest rates, and issuance of bank guarantees for newly awarded projects. Would like to mention few of the important balance sheet numbers as on 31st December 22. Our long-term borrowing stands at 51 crores, which was 646 in quarter 2. Short-term borrowing 140 crores. Gross block of assets 380 crores. Net block is 217 crores. And addition during the quarter is 29 crores, which includes purchase of capital assets for new sites. New amount due, net amount due to customers is 15 CR. Net unbilled revenue 150 CR. Retention non-current 101 crores. Retention current 33 crores. Mobilization advances 169 crores. Working capital days are as follows. Debtor days are 79. Creditor days are 60. And inventory days are 22. Total net working capital days are 41. Out of total credit facility of rupees 1,047 crores, utilized limit is rupees 858 crores, of which rupees 140 crores are fund-based utilization and rupees 718 crores is non-fund-based utilization. Increased fund-based utilization can be attributable to additional capital capex mobilized at new sites and significant payment of advances to suppliers and contractors for UP projects. Increasing non-fund-based limit also justified on account of bank guarantees issued for new sites. As on 31st December 22, the company had total fixed deposits of 316 crores, out of which 3 deposits are of rupees 60 crores. FDs worth rupees 253 crores are under lien with banks for credit facilities, and FDs given to clients as security deposit amount to rupees 3 crores. Work on hand as on 31st December 22 is 5075 crores. That concludes the updates on financials, and we are now open for Q&A session. Thank you.
Thank you very much. We will now begin the answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait while the question queue assembles. We have our first question from the line of Shravan Shah from Doral. Please go ahead.
Thank you. First of all, congratulations for a significant order win. But on the execution front, sir, this quarter seems to be a much lower versus expected.
Can you use your handset, please?
I am using my handset. Am I audible clearly, sir?
There's an echo when you're speaking.
Is it better now?
Yes, please go ahead.
Yeah. Sir, I was saying that in terms of the execution, this quarter seems to be a much lower versus what we were expecting. So last quarter we said, particularly in UP projects, we were expecting 250 odd crore kind of a execution, and now we have only 165, so 85 crore less. So total for FY23 we guided close to 2,200 crore revenue. So now till now for 9 months we have done close to 1,200 odd crore. So we need 1,000 odd crore in the fourth quarter. So how do we see the fourth quarter and for full year? How much now lower number are we looking at? And continuing to that, for a couple of years we were looking at a 25% kind of a growth. So will the lower execution for this year will be compensated in FY24 by having a much higher revenue growth in FY24?
Shravan, you are absolutely right. The total revenue which everybody expected and even I expected is little bit less than what we targeted and what we envisaged throughout the year. But the point here was little bit for the UP projects. Now we are at the stage of finishing an MEP, and each and everything has to be approved through PMC and again to the government. So things are getting little bit late at the approval level. But yes, you are absolutely right that we are falling short of about 100 crore in this quarter and maybe 100 crore in next quarter. But probably going ahead from here, now we have already started booking some of the revenues of MEP. Projects are in line except the hospital buildings which are little bit late, which will be completed next year. But major other projects are going on track, and now the things are, we are also tracking little bit more closely. So I feel that we may fall short of about 100 crore overall, but let us still believe that probably we will be able to reach to 2,100 crore by this year. This quarter, actually, what I expected was about 600 crore, and we have landed 500 crore. So I am still saying that maybe that we may fall short of 100 crore. Talking about next year revenue and compensating on what we have been doing today, is yes, you are true that probably that can be considered that even if we fall short of 100 crore, then from 2,200 crore going for 20 or 25% growth, we should be able to in the position to go for 2,700 crore. That's something which we will be tracking after March. But probably you are right that the target for next year should be somewhere in the range of 2,600, 2,700, so that this year's revenue which we have made fall short of 100 crore can be compensated.
Mr. Shah?
Yeah, thank you, sir, and thank you, and hope we should be able to compensate whatever the loss we have done on the execution front going forward. So now coming on the inflow front, so definitely we have already done close to 3,300 crore, and so what's the status of 350 crore L1 for the Gujarat tourism project, and how much more order we can still get by end of March, and how much now can we look at for FY24 4,000 crore kind of order inflow to sustain the 25% growth. So that's the number we are looking at.
See, you are right that 350 crore order of government of Gujarat is still pending and we are waiting for the approval. It is in the process with the only. It has already moved from the department for approval. So it's
Sorry, sir,
that order
was
is
not audible. To interrupt. So can you repeat again?
that order has already been through from the department and now it is in the process with the government. So probably we are expecting that order to come. So expecting onto that order and further expectation of one or two orders which we have already bidded and with one of the clients whom we are working, we may expect further 250 crore order. So probably we will be in the range of near to 3,900 or 4,000 crore. But what you are saying is, do we expect the same next year? Again, again I would like to say it's an opportunity which you get. This year also we were expecting only 2,500 crore, and it was a luck by chance that we get an opportunity to build large project like Surat Municipal Corporation, and we get that opportunity through. So things are moving economically faster. Projects from government and the private both are coming very well, and all the capex from institutions like Reliance and Aston Mittal are still in line. So probably we'll be having a good order inflow next year also. But the requirement from our side, even if we go target for next year's 2,600 crore, requirement for a 25% growth will be somewhere in the range of 3,000 crore. If we reach to 4,000 crore, it will be a better luck for next year also.
Okay. Lastly, so on the margin front, the guidance remains the same, 12 to 13%. That should not be an issue in terms of the margin front, EBITDA margin.
Yeah. That's the thing. You are always on the side of me. So I always say 11 to 13, and you always try to say 12 to 14. See, this is again, I would like to say that the EBITDA for a construction company to justify each and every project may vary from 1 to 2%. But yes, the confidence with which we build tender and confidence with which we execute the project, I think we should remain in that range only.
Okay. Lastly, Hetal ma'am, I need the data points on the balance sheet front, the absolute number on inventory, trade receivable, and trade payable.
Yeah, trade receivables are ending at around 400 crores, and inventory is 114 crore around, which includes 40 crores of WIP, which are for new sites.
Oh, and trade payable?
Yeah, that is around 300 crores.
So this 400 crore trade receivable you mentioned, so last September it was 280 odd crore. So does this including the retention money you are saying or the?
No, okay. That is because of the pace of the construction has gone a little bit higher than the last quarter. So the revenue which we booked in the last month of December, that outstanding is adding on to that total of 280 crore which was there in September. So that's the reason, not including.
And further to clarify, as of now, if we see whatever outstanding was there as on 31st December, we have already collected around 130 crores from those outstanding. Major execution was in November and December month. So that amount we have received till now. Around 150 crores has already.
Okay. So on a yearly basis, the number should not be, the data days should not be more than 60 days though. That's a normal rate that we have. So though it has increased as on December, but you mentioned we have received in the January.
Yeah, right.
Okay. Thank you and all the best.
Thank you.
Thank you. We have our next question from the line of Nikhil Kanodia from HDFC Securities. Please go ahead.
Good evening, sir. Am I audible?
Yeah.
So firstly, congratulations on the very strong order inflow for this 9-month FY23. My first question was on the execution part, which you have already answered. So my next question would be on the order book. So what is the order book under execution as on date?
The order?
The order book under execution.
So 50753.
From here on, it is 5075 crore.
Okay, and what is the share of Bhiwandi and Pandharpur projects in the order book?
Yeah, that is around 150 crores. Sorry, 850 crores.
So other than that, 850 crores, rest every project would be under execution, right?
Yeah. It is not 850, it is 750.
Yes.
It is 750, 700 only, not even 750, it is 700. The rest of the projects are
right.
contracts. You're right.
Okay, and sir, do we have any update on the hearing on this AWC BMD project?
Any hearing on?
Hello, am I audible, sir?
Yeah.
Yeah. So, any update on the hearing on the AWS project?
Yeah. That process has gone little bit into the end now. We have accepted the person's name which we have initiated as an arbitrator from our side. So probably next hearing the arbitration should be over and both the arbiters should be appointed. That's what we are expecting.
Okay. And sir, what is your bid pipeline as on date?
Bid pipeline has already declared 4,500 crores.
Sir, can you please repeat that?
4,500 crores.
Okay, 4,500 crores. And of this, the private orders would constitute around?
Bid.
Of this 4,500 crores that you are saying, the private orders would be?
Private orders would be 60%.
And majority of this would be from the state of Gujarat?
Yeah, only except two projects it is from Gujarat. The last project which I said about is for gem and jewelry, and the second project is IT Park in Chennai. So there is one more project of Central Vista. That is it is not 60%. It is about 70% is out of Gujarat. So 1,200 from Mumbai, 1,200 from NCR, Delhi, and 1,500 crore again from Delhi.
Okay, so 1,200 from Mumbai or 1,700 from NCR, and the balance would be from Gujarat itself, right? Which is around 70%.
Yeah.
Okay. Those were my questions, and thank you and all the best.
Thank you.
Thank you. We have our next question from the line of Alok Devra from Oswal. Please go ahead.
Hi, sir. Congratulations on good numbers. Sir, just wanted to understand, we have comfortably surpassed the order inflow which we were targeting. So, how much order, further order inflows we are looking at, because we have a full kind of 3-month busy period for order inflows coming up. So, just your thoughts on that, as in if there is an opportunity and if we are getting, say, cumulative orders of 1,500, 2,000 crores further, so are we open to that, or how is your thought process, sir?
See, actually we have reached to 3,300 crore order inflow for this year, and as I already said that one order is in the process of approval, that is of 350 crore from state of Gujarat. And the second order is what we have bidded. We are expecting that we should get that opportunities from private sector. So probably I feel like that we should be able to reach to about 3,800 to 4,000 crore in this year. And about the opportunities which you are saying, yes, we are bidding for some of the projects, but these projects or most projects are in process which takes minimum 2 to 3 months. Like Gem and Jewelry Park is on since last 6 months. Central Vista MP Chairman Office, it is only at the PQ stage, so probably that may not come before March. So presently the bid pipeline, what we have seen, we may get converted into final order or may get an opportunity to bid for a final order, will be somewhere in the month of after March.
Sure. And this 350 crore order which you highlighted in the previous question as well, this we have already received, or I mean we got some indication, or what?
No, that's the government tender where we stood lowest, and it was during just before the elections came up in Gujarat. So the process from government has already been done, but just after the election and just after the forming of new government, that order has gone in the approval stage at the government stage.
Okay,
but so we stood lowest, so we declared it.
Okay. So we are already L1 in that.
Yeah.
Okay. Okay. And just, sir, you mentioned that there is some execution which was expected this quarter and, fourth quarter, which would likely now happen in FY24. So what's the growth we are looking at now in FY24 over FY23, or just some, guidance on the revenue?
The type of project which we have received from March to till now, that all projects which are new for this year has already been started, and we have an infusion of new staff which has already been reflected to our operating expenses also. So we would like to expect the same growth of 20 to 25% next year also.
Sure.
Even if we get a reduction of 100 crore this year, we would expect the same next year.
Got it. Just last question, sir. How is the this precast execution happening, and any expansion plans there or any progress there on that?
Yes, we are now getting the inquiries from the market. These inquiries are on with the clients, and discussions are all still on. Rest of the things which we give, the order which we have already received, L&T and what we do, for which we are making warehousing, those projects are on, and the same production facility for L&T bullet train materials which we have to supply on duct side is getting ready also. So I see a better future that the inquiry should come, and as and when we execute one or two buildings, then we should be a good inquiry on that part also.
Sure, sir. I think that's all from my side. Thank you and all the best, sir.
Thank you.
Thank you. We have our next question from the line of Nikhil Abhyankar from DAM Capital. Please go ahead.
Thanks
Mr.
for the
Nikhil
opportunity, sir.
Abhyankar?
You can hear me?
Yes, but can you use your handset, please?
Yes, I'm using the handset.
Okay, please go ahead.
Sure. So just to clarify, you have given a revenue guidance of around 21 billion for FY23 and around 26 to 27 billion for FY24, right?
Yeah.
Okay. Okay. And so also, among the working capital, can you also specify the unbilled revenue, the mobilization advance, and retention money, please?
Sorry, your voice is not clear. Can you please repeat?
Yeah.
What exactly you require?
Can you give us the unbilled revenue, the retention money, and mobilization advance?
Yeah, I have already mentioned, but we'll repeat it again. See, net unbilled revenue is 150 crores, and the mobilization advance is 169 crores.
Okay.
And retention money, non-current and current, I'll say. Non-current is 101 crore, and current retention money is 33 crores.
30. Okay.
Yeah.
And so, you earlier mentioned I just wanted a clarification. You mentioned the execution of the Surat principal project of 3 years, right?
Yeah, 36 months.
33 months. So what can be the run rate of revenue accrual over, say, FY24 for this project?
We should expect, because the first part will be doing the basement and the foundation, so we should expect about 300 to 350 crore first year, as it will be going into structure part. Later 2 years where we'll be there where will be partly structure and partly finishing and MEP and furniture. So first year we should expect about 300 to 350 crore minimum from that project.
300 to 350, then equal for the remaining 2 years?
Yeah.
Okay.
Does that answer your question?
Yes, sir. That's all from my side. Thank you.
Thank you. We have our next question from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good evening, sir. Thank you for taking my question. So my first question is on the revenue guidance. So you have given a guidance of 2,100 crores. So should we assume a strong run rate in Q4? So what kind of contribution we can expect from UP project? Because as you said, 900 crore revenue in Q4 to achieve a target of 2,100 crore, and UP project is still more than 1,000 crore left.
Probably combine both civil and MEP and other execution which we have to do in this UP projects. Now we are targeting about 100 crore each month from UP for all the projects.
Okay, so in all 7 projects combined, we are targeting 300 crore revenue in Q4.
Yeah, we are planning to execute that, and that's what our target is.
So balance 600 will be from your existing ongoing. So basically, sir, what I can understand is out of 5,075 crore order book, your executable order backlog could be around 3,500 crore because 1,350 crore is Surat, and then some projects which are won in Q2 might not be contributing big way in Q3, Q4. So safely we can assume around 4,000 crore is executable, of which around 1,000 crore is from this project UP. So balance we are expecting 600 crore from other projects, right, sir?
Yeah.
So this would be the highest execution we will see in the history of the company for the quarter.
Yeah, it is always the highest quarter each year if you compare with quarter 1, 2, 3, and the fourth quarter is always the highest because that's a peak period where construction companies can execute the projects very smoothly without any interference from the uncertainties of labor and all that. So that has been the history. So let us, we expect the same this year also.
I just want to you that you are guided for 2,000 crore in Q3 in terms of revenue. So I think even after not meeting the target for Q3, you are targeting a higher. You are giving a higher guidance for FY23. That is what my concern was.
Yeah. No, we have already given a guidance of about 600 crore in quarter 3. That's something which we are expecting in next quarter only. But the year we are falling by 100 crore, so we are trying to say that it may overall we may get a reduction of 100 crore.
Okay. And sir, on the Surat project, it is you have to build 2 towers of 27 floors, right, sir?
Yeah.
Okay. And sir, if you ma'am, Hetal ma'am, can you give me the cash and bank balance and what is the precast revenue in Q3 and precast outstanding order backlog?
The precast backlog will not be separately mentioned because now even for our current projects also we are manufacturing some of the precast elements. But yeah, you can say our earlier order of L&T has been almost executed, and the balance of that was around 60 crore. And the balance we can say 153, the new order, which will be under execution.
So and you understood. So you said 60 crore revenue is booked in Q3 from precast, and 153 crore is the order backlog.
Cumulatively, you can say cumulatively, but see, it will be like now a backward integration for us, because we will not be segregating the revenue for our existing sites.
Okay, so 60 crore cumulative revenue booked so far in precast in 9 months. So basically Q3 is lower because in first quarter you did 30 crore and 25 crore in Q2. So Q3 there has been not much revenue booking from precast, right?
See, that we cannot say exactly because as I said, we need to send the precast elements to our other projects also.
Fine.
Yes,
so right now,
some of the things of civil is converted into precast. So the precast plant is being utilized as a company's asset, not an individual cost center.
For particular client, okay. So, sir, what kind of contribution we can expect from precast from FY24 onward? As you said, we are integrating with our ongoing projects. So, what kind of benefit we will get now in terms of execution timeline, the margin, or any bonus we can earn because of this precast advantage we have? Any thought on this from next year onwards?
Usually in building sector there is no bonus.
Sir, your voice is not audible, sir.
Sorry to interrupt, sir. You're not clear. Sir, can you please repeat?
Bonus is concerned, close of
I'm sorry, sir. The voice is still not clear.
So then I'm hearing you very clearly. I think my...
No, sir, now it is clear. Now it is clear.
Now, sir.
Yeah.
Please go ahead.
So bonus clause are never there in the private sector, the government sector, in the building sector. But yes, the execution speed may give temptation to the client to give us a better margin, because that way they are saving some times on the project side. So that can be a reason to add on more profits in future.
Because if you use precast, your order value will go up because of that. Only obviously saving on time is an advantage to the client. So that will help us.
Yeah.
Okay. And sir, cash and bank balance as on December, is it?
Yeah, I have already mentioned the amount of fixed deposit, so that contributes our major cash and bank balance. So it's 316 crores.
Okay, got it. Okay, so that's it from my side. Thank you and all the best, sir.
Thank you.
We have our next question from the line of Samyak Shah from Samiksha Capital. Please go ahead.
Hello, am I audible?
Yeah.
Please go ahead.
Yeah, thank you for giving me the opportunity. Actually, I wanted to know about your CAPEX plan. Like, what will be the CAPEX going forward as a percentage of sales, if you can say?
See, CAPEX, if you see throughout, I think every year we range between 3 to 4%. So probably that will be the standard criteria on which the work is going on, and the standard criteria on which we have been growing at 20 to 25%. That will be still in the range of 3 to 4%. Provided some extra orders also come up suddenly, then that can be an impact of 1%. Otherwise, it should be within the range of 3 to 4% of revenue.
Okay. Got it. And sir, for the Surat high-rise building, what are the margins that we are expecting in that?
It is based on the same guideline what we have been quoting till now, so that will be carrying the same margin.
Okay.
Thank you.
Okay, thank you.
Thank you. We have our next question from the line of Uttam Kumar Shrimal from Axis Securities. Please go ahead.
Yeah, thanks for the opportunity, sir, and congratulations on a good order inflow. My question is basically related to your debt position currently. So this year, this quarter, our interest cost has gone up. So this run rate will continue in the fourth quarter also?
See, currently what we have utilized is like our working capital is 140 crores. So because of that has increased. But it may not continue. This is like currently UP projects, we need to pay advance to some of the contractors. So when it realizes into sales bills, it will be reimbursed. So this may not be
majorly
MEP item. So that will be reimbursed and will not be continuing with the same level of utilization.
Okay. And madam, your long-term debt has also increased compared to last year.
Yeah, around 5 crores or all we have taken the advance loans from banks.
Okay. So currently it is standing around 15 crores.
Yeah, right. So if you compare with last year, yeah, it will be it has increased, but compared to September, additional 5 crores we have done.
Okay, ma'am. That's all from my side. And thanks.
Thank you.
Thank you. We have our next question from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question, sir. And congratulations, strong order inflows during the year. Sir, just want to understand on the cash flow part a little better. So when I look at Q3, because we saw a ramp up in execution, I mean at UP project, we saw the debt go up and even the FD balance seems to have come off on a sequential basis. Given the fact that I mean in Q4 we are targeting a significant jump in revenues, right? From 500 odd, we planning to go to almost around 900. So is it fair to assume that the debt would go up even further in Q4, or you think I mean the cash flow from operations?
Yeah. I mean, you're right, but as Italman has clarified that about 140 crores has been given to subcontractors for MEP, and most of them MEP materials has always carry an advance before placing the order to the suppliers. So that's the only reason that debt has gone up. Otherwise, probably they should not be effect every time. And for this quarter also, cash flow is disrupted because some of the, if you say the overhead expenses has gone a little bit high compared to last quarter, about 6 to 7 crore. That is impacting our net profit clearly, and that is because the staff infusion from March onwards to cope up with the new requirements of the project which we have started after March, and that's the reason that cash flow is little bit disrupted.
Sure. And just one small clarification. So the 3,300 odd crore rupees of orders that we have managed during the year, including SMC or Surat Municipal Corporation project, how many of these orders I mean the orders wherein we are yet to avail mobilization advances, how much would be the quantum that you would be in a position to kind of avail whenever you decide to kind of go and draw these mobilization advances?
Your voice is breaking and the question was not clear. Can you repeat it?
So I want to understand the new projects that have come to you during the year, right? I mean 3,300 odd crore rupees, including Surat Municipal Corporation, right? Most of these would carry mobilization advances, am I right?
Yeah.
How much of these mobilization would have been kind of drawn till this time, and how much more would you be able to draw? I mean, if you decide to draw these mobilization advances.
I think Edelman has already given the figure of 160 crore of mobilization advance. We have it's still outstanding on the books which we have got from the different clients.
I want to understand your new projects. How much would you be able to draw? I mean, essentially, wherein. So Surat Municipal Corporation would have some number, right? I mean, you would be able to use that money whenever you decide to use it.
Received from SMC, that mobilization advance is yet to be received. So that effect will come in this current quarter.
Sure. So only SMC is wherein we are yet to draw. Otherwise, all the.
Yes.
Oh, okay. Sure.
Yes.
Thank you. That's it for mine, and all the very best for future.
Thank you. We have our next question from the line of Vishal Periwal from IDBI Capital. Please go.
Yes, sir. Thanks for the opportunity. This is one clarification. The order book breakup that we provide between industrial and institutional. So the government-rated orders, they are in two categories, right? Government and government residential, and rest are private. Is that fair understanding?
Yeah, there are two categories.
Yeah. So the government orders are only in government and then government residential. Rest are private, right, ma'am?
Your voice is breaking. Your voice is breaking, but I think you are asking a question that if government projects are distributed in two heads, that is, one is government institutional and one is government residential. I think that's the right thing that we are saying. Yeah, it is there in two. The government residential means when we get an order related to this EWS and all this such types of work which comes out from the government side.
Okay. So I think then the further breakup is like, the private side, which is institutional in particular, it has seen a jump in the order book. So any particular segment in institutional that is driving it, or overall the private capex that you talked in the initial commentary. So can you give a little color, like which segment is driving this private capex?
No, the overall projects which we get from other private corporates and their internal capex, the only part is sometimes it is industry, sometimes it is more related to their office infrastructure. But mostly it is from the private sector, it comes as an corporate office, as an industry. Or a residential facility has to be created for any group. Such types of projects come from the private sector.
Okay, so probably it's a mix of thing. Won't be fair to pinpoint one particular segment for this.
No. It will be a mix of anything which is related to building.
Okay, sure, sir. Yeah, that's all from my side. I'll come back in the queue. Thank you.
Thank you. We have our next question from the line of Vijay Kumar from Spark Capital. Please go ahead.
Good evening, sir.
Good evening.
Yes, I logged in a little late. Just wanted to understand for the Surat Municipal Corporation project, do we have land and funding in place?
Can you repeat the question again? The voice.
I would request you to disconnect. I'll reconnect you.
Hello.
The voice is very clear for me.
Okay.
Yeah. Mr. Vijay Kumar, please stay connected. I'll reconnect the management team. So kindly to disconnect. Thank you. Ladies and gentlemen, I request you all to stay connected. We have reconnected the management team. Mr. Vijay Kumar, can you ask your question again, please?
Yes, sir. Municipal project and the funding, is it in place?
You are asking about the funds is being placed in place or not? Hello?
Funding and whether any approvals planned, are they in place, and when it will start? What is the timeline for completion of
The project has been already announced. The land is very clear because it was previously jail. Now the jail has been shifted from that location and it is grounded also. So project approvals is clear. Finance is still, we are not having any clarity from the government side. But since this being a market project and the first initiation for any project from a government going for 27-story as a vertical tower for government offices, I think either the state government and the municipal corporation both will be taking initiative to complete this project.
Okay. What about any approvals or land acquisition? Is that all in
I think, I said it was a jail and the jail has been vacated. It is a total ground at site. And as they have said us that the clear approvals are also on track because this project was on since last 6 months in terms of paperwork and tendering and other processes. So as far as these 3 processes, I think there should not be any hurdle in terms of approval and lane as of now.
So we expect this to start, and is it a 2-year completion period?
No, it is 3 years. We have to give 36 months. We have to carry out 1344 crore. And it should start maybe by maximum by 1.5 months.
Okay, sir. Those were my questions, sir. All the best.
Thank you.
Thank you. We have our next question from the line of Nikhil Kanodia from HDFC Securities.
Thank you for the follow-up opportunity. I just wanted to confirm the debt numbers. So you mentioned that 51 crore is the long-term debt and 140 crores is the short-term debt, right?
Yeah, right.
And what is the cash bank balance that you would be having?
Cash and bank balance is around 5 crore, but our FD will be 316, as I already mentioned.
316 crores, right?
Yeah, 316.
Okay, ma'am. Thank you.
Yes.
I think we should now conclude on the call because the time is over and I have to also leave at 5 o'clock. So if you want anybody to take the last question, it is fine. Otherwise, I will leave and you can continue on any question related to finance.
Should we take the last question, sir?
No problem.
Yeah. We'll take a question from Mr. Akshay Kothari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. So, wanted to know the reason for slower execution. One of them could be Gujarat elections.
No. It has nothing to do with Gujarat election. The lower execution is majorly on GP side, which we are expecting better than what we have done. And that is mostly because of the finishing stage, you have to get each and every material being approved. And at the MEP stage, each and every brand has to be approved. And that is approval comes from 2 stages, architect, PNC and the client. So that is little bit in time. And that's the only reason for the lower execution.
Okay. Sir, there are some articles and talks about bigger players like Tata, Adani, Reliance, and like of other bigger EPC players getting aggressive on the EPC front as well, which they were not earlier. So, what are your views regarding it?
Actually, I don't have knowledge about Adani getting aggressive on. They are more into infrastructure. Tata, I think building side, they are maybe having 10 to 20% of their order book. Actually, 70 to 80% of their order book comes from infrastructure. So EPC side, presently, the most of the contract, largely the contract which we are bidding since last 3-4 months. We see only L&T, Shapoorji, NCC, and sometimes Tata on the building side.
Okay. Sir, I have a last question. Sir, generally, what is the trend? So budget is due in next elections are due in next 400 days. So there is very much likely that it would be a populist budget. So what is general trend 1 year before elections? Do we see a slowdown in some order inflow, or the order inflow actually increases? What are the trends as per your experience?
I don't understand that trend about election and election-related issues in terms of execution of order or declaring of order. But the situation what we see since last 6 months, the economy is going so far from the private side as well as the government side, and the government order which already been announced, even if that comes to in execution in next 2 years, I think there is huge plenty of work to do, all good contracting comes to do for next 3 years.
Okay. Yes, sir. That's it from my side. Thanks a lot.
Thank you.
Thank you. I now hand over the call to the management team for closing comments. Over to you, sir.
Once again, thank you everyone for joining us and for your continued support and trust on us. We hope that we have been able to address most of your queries. In case of other queries, you may reach out to our investor relation advisor, E&Y, and they will connect with you offline. Thank you, Amar, for hosting on our call. Thank you again. God bless you.
Thank you.
On behalf of Ambit Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
The conference is no longer being